A massive liquidity surge is on the horizon, with significant implications for tech, crypto, and general markets. Join top experts Raoul, Gary Wagner, Lawrence Lepard, and Ted Oakley in dissecting the current financial landscape and what it means for your investments. From inflation risks to gold's potential breakout and the dire predictions for debt, don't miss this chance to stay ahead. Be sure to like and subscribe for the latest in insightful financial analysis. Today, on Financial News and Review, we will summarize the following videos. From Blockworks Macro, we have the exponential age. Liquidity will continue to surge into 2025, Raoul. From Kitco News, we have gold set for a breakout on the charts. June jobs report could be the catalyst, Gary Wagner. From David Lin, we have debt doom loop, system blows up unless massive inflation returns, Lawrence Lepard. From Oxbow Advisors, we have Ted Oakley, Oxbow Advisors, Market Update, July 2024. Welcome to Blockworks Macro. In this episode, we delve into the fascinating world of macroeconomic trends with Raoul, founder and CEO of Real Vision. Today's discussion centers on the ongoing liquidity cycle and its far-reaching implications for both financial markets and the exponential age of technology. With Raoul's extensive background in macro investing and his biases towards the transformative potential of technology and decentralized finance, expect a well-rounded, thought-provoking conversation. Raoul posits that we are transitioning from what he terms macro crypto spring into macro crypto summer. His core thesis revolves around the idea that disinflationary forces, coupled with sluggish growth, will push central banks and governments to inject liquidity into the economy. This scenario creates a macro utopia, where conditions align perfectly for financial markets, particularly crypto, to thrive. He underscores that this phase aligns with the banana zone, a period characterized by accelerated market activity and heightened asset valuations due to increased liquidity. Here are the key points discussed by Raoul: liquidity injection and macro cycles. Raoul emphasizes that we are at a unique juncture of adding liquidity due to disinflationary forces and slow growth. He highlights the interconnectedness of central banks and governments globally, explaining how this synergy drives liquidity. The banana zone. Raoul introduces the concept of the banana zone, a phase where markets experience accelerated activity due to liquidity influx. The term aptly describes the upward parabolic moves in asset prices, especially in crypto, during this period. Global coordination. He sheds light on the coordinated efforts by central banks and governments, citing Janet Yellen's visits to China as pivotal in orchestrating liquidity solutions. This international cooperation aims to stabilize markets and ensure synchronized economic cycles. Refinancing cycles. Raoul talks about the perpetual refinancing cycle driven by high levels of debt and low interest rates, positing this as a mechanism to maintain economic stability and growth. Raoul made the following predictions. Continued liquidity injection. Raoul predicts that central banks will continue to inject liquidity into the economy through measures such as cutting rates and implementing unconventional monetary policies. This will likely persist into 2025. Tech and crypto boom. He forecasts that technology and crypto markets will experience significant growth due to increased liquidity and adoption of blockchain technology and AI. Raoul concludes by summarizing the immense potential of the current macroeconomic cycle, particularly emphasizing the opportunities in crypto and tech sectors. He advises viewers to adopt a long-term investment mindset, leveraging the ongoing liquidity injections to their advantage. As a call to action, Raoul encourages viewers to stay informed, remain patient, and be prepared to capitalize on market corrections when they arise. Welcome back to Kitco News. This week, we're joined by our resident technical analyst, Gary Wagner, who returns after a brief hiatus. Gary is here to dive deep into the current state of the gold and silver markets, specifically highlighting upcoming catalysts that could drive significant movements in precious metals prices. The core thesis of this discussion is centered on the potential breakout in gold prices, which could be driven by the upcoming June jobs report. Gary Wagner argues that recent Federal Reserve communications and ongoing market conditions suggest a pivotal movement in gold, supported by technical chart patterns and key economic data. Here are the key points discussed by Gary Wagner. Federal Reserve stance. Fed Chair Jerome Powell's recent cautious comments at the European Central Bank Forum in Portugal about cutting interest rates. Powell's emphasis on needing consistent data and a strong labor market before making any rate changes. Current gold and silver market status. Spot gold prices are holding steady around $2,300, while silver trades around $29 per ounce. Gary highlights the importance of the upcoming June jobs report, predicting it could significantly influence gold prices. Technical analysis for gold. Gary identifies a pattern of descending tops and flat bottoms in the gold charts, reminiscent of past breakout points. June jobs report could play a significant role, especially if job growth comes in lower than expected. Technical analysis for silver. Unlike gold, silver hasn't reached its all-time highs recently, with resistance around the $32 mark. Gary noted that silver's dual purpose as both an industrial metal and a hedge could drive its future performance. Significant quotes. Gary remarked, "If the jobs report shows a contraction of jobs, we could see gold make a solid move to the upside." Gary Wagner made the following predictions. Gold price movement. Gary explains that gold could rise above $2,300, potentially moving past $2,450, driven by weaker than expected job growth in the upcoming report. A breakout could see gold climbing to around $2,500 in the near term. Silver price movement. Silver could climb above $32 if it establishes a sustained move, potentially heading towards $40, driven by its industrial demand and market conditions. Gary Wagner concludes that traders should watch the June jobs report very closely, as it could be the deciding factor for significant movements in both gold and silver markets. He advises traders to be prepared for both bullish and bearish scenarios and stay informed about the broader economic indicators to make savvy investment choices. In this insightful episode from the David Lynn channel, economist and strategist Lawrence Lepard discusses the ongoing debt crisis, economic challenges, and the future of sound money, namely gold and Bitcoin. The core thesis of Lawrence Lepard's analysis stresses the critical role of inflation in sustaining the current economic system. Without substantial inflation, Lepard argues, the system is poised to blow up, leading to an inevitable economic crisis. He predicts that recurring crises will catalyze inflationary events necessary to maintain economic stability, despite their negative long-term consequences. Here are the key points discussed by Lawrence Lepard. Current economic environment. U.S. deficit is nearing $2 trillion, with the federal debt projected to reach 122% of GDP by 2034. Economic growth slowing to 2% in 2024 and 1.8% by 2026 and beyond, according to the Congressional Budget Office, CBO. Systemic necessities and crisis. The system requires ongoing inflation to prevent economic collapse. Lepard asserts that another crisis and inflationary event are inevitable. The 2020 COVID-19 stimulus actions effectively demonstrated the necessity of increased monetary supply to sustain the economy. Political and financial leadership. The recent presidential debate underscored a lack of effective leadership, raising concerns globally about the credibility and stability of U.S. political and economic systems. Debt and dollarization. The trend is moving away from storing surplus earnings in U.S. treasuries, with more countries joining alternative initiatives like BRICS. Central banks are increasing their gold reserves, while some are also subtly acquiring Bitcoin. Lawrence Lepard made the following predictions. Fed's interest rate cut pre-election. Lepard predicts a surprise cut in interest rates by the Fed before the next election, despite official statements indicating otherwise. Inflation and gold increase. Lawrence suggests that gold could end the year at around $3,000, fueled by the monetary system's inherent demands for inflation. Bitcoin growth. Lepard foresees significant appreciation for Bitcoin, driven by its scarcity compared to fiat currencies and continued adoption trends. Lawrence Lepard concludes that the system's dependence on inflation is untenable long-term, signaling eventual economic turmoil. He strongly advocates for allocating investments into sound money assets like gold and Bitcoin as protective measures against foreseeable inflationary waves and currency devaluation. Recognizing current political and economic realities, Lepard encourages individuals to stay informed and proactive in adjusting their financial strategies. Welcome to Oxbow Advisors. In this quarterly market update, managing partner Ted Oakley delves into the current economic landscape, focusing on the disparity in financial conditions between the top 20% of earners and the bottom 50%, the impacts on real estate, and the broader economic implications of public and private debt. The core thesis of Ted Oakley's discussion is that the economic conditions are starkly bifurcated between the wealthier top 20% and the struggling bottom half of the population, significantly affecting various markets such as real estate and consumer credit. Meanwhile, public debt levels and government spending are creating long-term economic pressures that could lead to a slow and painful adjustment period in the coming years. Here are the key points discussed by Ted Oakley. Economic disparity. The top 20% of the population who possess substantial assets and income are experiencing relatively better economic conditions. In contrast, the bottom 50% are struggling with higher costs for essentials like shelter and food, significantly impacting their financial stability. Real estate market conditions. All segments of the real estate market, multifamily, commercial, and residential, are experiencing slowdowns. Indicators such as declining housing starts, falling permit numbers, and commodity prices for construction materials like lumber signal weak future growth. Consumer credit trends. Rising credit card delinquencies and higher interest rates are putting additional pressure on consumers. This trend is worrisome, as it typically precedes broader economic downturns. Government debt and public spending. Current government spending on interest alone is approaching $1 trillion, highlighting the significant fiscal pressures. Public spending on infrastructure has been a short-term boost, but contributes to long-term debt issues. Stock market observations. Individual and institutional investors remain heavily invested in equities, particularly tech stocks, reminiscent of the situation in 2000. The stock market is currently highly valued, with major indices showing extreme bullish sentiment despite underlying economic concerns. Ted Oakley made the following predictions. Economic adjustment. Ted Oakley predicts a gradual economic adjustment as inflation dynamics evolve and government debt levels continue to rise. He expects that a period of inflation slightly above normal rates may persist for the next few years. Market corrections. Oakley anticipates potential corrections in the overvalued stock market, especially in tech stocks, which are currently priced ahead of their earnings potential. Ted Oakley wraps up his discussion by emphasizing the necessity of caution in the current economic environment. He advises viewers to maintain diversified, quality holdings with a focus on safety, such as Treasury securities, and to be wary of heavily concentrated investments like certain index funds. His overall message is to stay informed and strategically adjusted for the potential economic fluctuations on the horizon. In these videos, Raoul emphasizes the positivity brought by liquidity injections, predicting a booming tech and crypto market. Wagner focuses on technical patterns in gold and its potential breakout, especially if the upcoming jobs report disappoints. Lepard discusses the uneasy dependency on inflation to fuel economic stability and forecasts significant gains in gold and Bitcoin as safe assets. Ted Oakley highlights the economic disparity and looming adjustments in the stock market. While all experts agree on the potential for shifts in market conditions, they each bring unique perspectives on where investors should focus their attention. Thanks for watching Financial News and Review for July 3rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.